If you guys like how I do my chart analysis on YouTube and you want to learn how to do it yourself, click the link below to check out the Vee Trades technical analysis course. What's up traders, this is Vee Trades and today I'll be doing a technical analysis breakdown for OCCIDENTAL Petroleum Corporation with the ticker symbol OXY. This was a viewer's request and thank you for your donation. If you want a chart analysis guaranteed to be done, please read the description below. Also take a second to give the video a like and subscribe for more chart analysis. I appreciate it very much. This video is for entertainment purposes only, does not constitute any financial advice. I will first go over what I see on the daily chart and finish the video off with the weekly chart. So the daily chart is looking pretty bullish. You can see that we've been going up ever since we had this large double bottom back here in October of 2020. You can see that this double bottom marked the lows of the downtrend. So after you see a large dump like what OXY did right here back here in February of 2020, that's kind of bullish because the market doesn't move in straight lines and this is unsustainable. So this is kind of like a capitulation for the short sellers. We got a massive dump. We had some short covering or profit taking, a little rally up, and buyers trying to pick a bottom. And then obviously prices still went back down to retest the previous lows just to confirm if that was the bottom or not. And then prices stopped out all the longs because this candle went a little bit lower than the previous low. And then that's when we saw the major rally start because all the smart investors, all the professional traders jumped in once they saw that the market verified that this was the bottom and a strong support. You could even argue that there was a triple bottom because we got a low right here. We came back again, bounced. We came back another time and prices cannot break through it at this $9 level, more like the $9 level, and then prices rallied very strongly. So we've been going up ever since, making higher highs, higher lows. It's just a very strong uptrend, a very healthy one too. So let me show you guys the channel, and the channel will tell me what prices are probably going to be doing next. So if I connect the swings, you can see that this fits pretty good right there. If I drag this up, this looks like the channel that prices are respecting. It's going to make this yellow. Let me drag it up a little bit higher. So you can see that this third touch confirmed the channel was drawn correctly. We rallied up and we're still continuing higher. And I think we're headed to the 68 or possibly even the $70 level before seeing a bigger pullback, because we are getting kind of unsustainable because we're having a sharp increase in price. So that could be a little unsustainable for prices, but we do have support because this channel support line is acting as support. But you can see that we also are getting rejected from the resistance side of this orange channel. So we have two channels that we need to be focusing on. The yellow one is the major one because it's been going on since 2020, and now the more recent one is last year, December 2021, is this orange channel because the prices are more aggressive now than before. The angle is steeper, so there's two channels in play, which is a good sign. It just gives you more buying opportunities. So again, we just bounced off the resistance side of the channel of this orange one, so that's why I'm expecting a pullback maybe to the support side and the midline of the yellow channel before we see higher prices. Either we do that or the market could be really bullish. We bounce from the EMA and the midline of this orange channel and just go straight up. So we'll have to wait and see. I'm expecting the two-legged correction back to the the $48 or $49 level before seeing the bounce up to the $70 levels. And then from there, we're going to be encountering resistance because we're going to be bouncing off the major yellow channel that's working higher. So that could lead to a much bigger correction, maybe back down to the $39, $40 level, because that's right where this entire up move started, a very aggressive up move. So that's where I'm thinking prices come back to and hit all the break-even stops for the buyers or even stop them out. So we could do that. I'll have to wait and see. Either way, I'm super bullish on oil or natural gas. It's just a commodity cycle that we're in. So I'm looking for much higher prices for Oxy. So that's everything I have on the daily chart. Let's go over take a look at the weekly chart. So here's the weekly chart for OXY, and you can see that the double bottom at the $9 level was exactly where pretty much the lows are for the entire stock. See that if I scroll to the left of the chart, you can see that the price action is valid pretty much since the 70s. So every time prices came to the lows at this $9 level, this horizontal line, we bounced and sent prices higher. So again, prices are not random. Why did we sell off all the way down to this black horizontal line, which is also at the lows of the price action in the past, and then that sent prices much higher? So again, you just got to understand how the price action works, and then you could profit from it. So since price action came back down to the lows at the $9 level, just like what we had in the history, and when we're at this $9 level and we're in a commodity cycle, that's what I'm thinking we get, again, a repeating pattern. We were back at the lows, now we're seeing massive amount of buying. This could be a commodity cycle that leads to much higher prices, probably even triple digits. So that's where I'm thinking prices can go. Let me go and clear the chart. So I'm 80 to 90% certain that we will probably reach triple digits for this stock, because it looks like it could be just a bigger range pattern since 2000, early 2000. This looks like the range pattern that prices are respecting. It looks like for most of the time the price was in the upper bounds of the range, above the 56 and below the $102 level. It was trading between that. We finally broke below it, went back down to the lows, and now we're seeing massive amount of buying. That looks like prices are heading to the triple digit level. So that's where I think prices are going. There is this bearish trend line working lower that could be turning into a channel. So let's go and make this yellow. So we have an orange range and a yellow channel working lower. So prices could get rejected from the $70 level and then go lower, maybe back down all the way to the lows, or at least get temporarily rejected before continuing higher. Or we can just blast right through it and start making higher highs, higher lows, all the way to triple digits. So I'm, like I said before, I'm 80 to 90% sure that we're just going to continue higher to the triple digits, and probably maybe 10 to 20% sure that we would get rejected from the resistance side of this channel and continue lower. I just think it's a commodity cycle. This is oil and gas production stock, so I think they're definitely going to be profiting from the inflation of the 2020 decade. So that's why I'm much more bullish than ever before for oil and gas. So I think we're going to go higher, and the technicals definitely show it. Thank you for stopping by and checking out my video. Make sure to check out the rest of the channel, since you might be surprised what you can learn. Leave a comment down below on where you think prices are headed. Also share the video if you want your friends to learn about the markets. Lastly, I appreciate any feedback to help improve the channel, since I want to deliver great content to you guys. See you next time, and bye.